Good evening, everyone. Time for another silver update. This is the 5-minute chart of silver provided by netdinia.com. You can click on the link below. You can see that we had a very strong run-up at about 8 o'clock, 9 o'clock, the opening yesterday. Ran about $1, roughly a bottom of 31.40, and then a high you can see about 32.55, so about $1.15. And then we get the opposite today, a run down. Can't really account for the news. Maybe it's China. We're going to talk about it in a little bit. But this is more confirmation that what Bix Weir has been saying is ultimately true, that these are really just computer-controlled prices. Let's pull up the volume chart and take a look at it. So you can see that we just had a big run up on fairly decent volume, then a big smackdown on a little bit higher volume, but it's really not that productive to make short-term calls because they have so much control. Obviously nothing in the fundamentals of silver, as if the fundamentals of silver have ever determined the price, but nothing has changed in the fundamentals of silver. So if anything has changed, it would be the fundamentals in the money, the dollars that are chasing silver or potentially could chase silver. Now that, in my opinion, is also a bogus argument because there's more than enough money out there. There's more than 100 times enough money out there to drive silver to $1,000 without even any effort. So really, this is not supply or demand. It's just computer-driven trades. Nevertheless, it's very important because as you look out to the daily chart, you've had a lot of opportunities to stack physical silver at a cheap price. You had a chance at about 26 here, another 26 there. You got a few 31s here. Maybe we're rounding and going higher, or maybe we're going to get a drop down. You'll get another chance to buy. It's not a real market in the sense that the daily moves have any particular meaning, but it is a real market in the sense that it's connected to the prices that are quoted on APMEX, Gainesville, Provident, Kitco, Northwest Territorial Mint, and all the others. So they still tie their physical prices to these computer-controlled paper prices, and as long as that's the case, these prices are important. Now, if at some point in the future these physical dealers of physical metal actually disconnect their prices, and you can see that in some of the numismatics, especially the Perth Mint issues, normally that's expressed as a premium above spot, and those premiums can be very high. But as long as it's the case that they're still setting their prices by these COMEX control prices, then that's going to be a deal of the century for you to be able to stack as they manipulate these prices. Now, let's jump over to Apple because we've been watching this chart very closely. Apple has been called by myself and a couple of others now. I think it was Mish that came out, or maybe it was Carl Denninger, but came out and said that this is a bubble. I firmly believe this is a bubble, and you can see that we had a very large drop this morning, a little bit of a rally, and then a drop right on the close. So there's a lot of key areas here in the Apple chart, and of course Apple, in my opinion, is going to be the leading stock as far as a breakdown in the U.S. stock market. So you got this very important technical support level that's around 597, 596, and we'll just draw the line. I can't get it flat. We'll just draw it there. You've also got a very important gap breakout right here. That's around 570. You've also got a really key large gap breakout all the way back here at 431. So I fully expect that all of these prices are going to be tested on the way down. I don't think there's any question that we're going down. Really, it's not going to take much more. What you have when you have these parabolic moves, if we go out to the weekly, you can see that when we have these types of parabolic moves, let me clear this line off of here. When you have these type of parabolic moves, just a small downdraft, and we can measure that. We'll clear off the lines. You can measure that by the size of the red line. You can see we have a fairly large red here. We had one here, but nothing like that one. And we have to go quite a ways back. Here's one here. So will we get this sort of thing? It's possible. Consolidation, you can see that's back all the way at 260, and a consolidation and then a breakout. That is possible, but I can't say why exactly, except for just the technicals. That it's my opinion that Apple has pretty much run its course, and we're going to see something like this, a breakdown roughly like this. So that it's my opinion the chart's going to look something like that, probably down to test here, and then back to here, and then we're probably going to get a test all the way back to here, at least. So we're looking for $200 on Apple stock. That's going to be about a 2/3 decline. And with this type of chart, that's actually going to be a healthy correction. Even if it were a healthy bull market, you'd have to have that type of correction. If it's a bear market, then who knows how low it's going to go. So let's jump over to the question of the night. And that is from Aqua Purity. And his question is storage options. Hey, Brother John, big fan of your rational analysis and commentary. Thank you. I wanted to request that you talk about storage options for metal holders. I have some metal, but don't really understand what options I have for storage. Should I find some sort of vault? How do I find one in my area? Are they safe? Is the safe deposit box at a bank safe? Should we just bury it in the ground like squirrels? How deep would it need to be buried to hide it from detectors? Even if you have a certificate with the actual serial numbers, is that even safe? As in MF Global Metal Holders had serial numbers, the bankruptcy trustee still stole their metal, etc., etc. I would love to know the storage approaches others are using to safely store their metal. So there's a lot of options that you have. The key distinction I'm going to make is the distinction between whether or not someone else is storing your metal for you or whether you're storing it yourself. Now, if you choose the option of a safe deposit box, I've covered that in my Office series. There are various rumors and myths about what actually happened in the 1933 seizure of gold. And according to Charles Voy, at least, there was a 1934 seizure of silver. But the question is, how safe are the safe deposit boxes? Now, if you followed the news on this in California, they had a big scandal where they were drilling out and taking people's boxes. And it turned out those people had regularly paid their bills. They took the contents, sold them at auction. It was a huge scandal. And so that's a risk. There's also the risk of Homeland Security, which has pretty much stated that in the case of a national emergency, they will be able to post agents and not allow you to take out metals or guns or things like that. So those are the risks. If you want to take those risks, go ahead and do that. Now, the other one is something like a private vault. Now, you've got James Turk with Gold Money, where you have various vaults overseas where you can have them store your metal for you. This Gold Money is probably the best of these, although there are a lot of others who are now jumping on the bandwagon. James Turk has the longest established reputation in this, and these are bars that are assayed. They are bars that are checked for purity. They are audited on a regular basis. So Gold Money's probably the top in that, if that's your choice. Now, if you want to go into the real tinfoil hat situation, then the term that I use is that if you believe that you're living in a pirate economy, and I would describe a pirate economy being a economy such as the one that we have, where we have financial piracy all over the world and all through the governments and all through the corporations, where a lot of the money is just being stolen without any recourse, whether it's MF Global or the banker bailout or anything else. It's basically piracy. And of course, in a pirate economy, you're going to have to behave like a pirate. So clearly, the pirates of the past would bury their metals at an unknown location with a secret encoded map where only they knew it and knew how to decode the map. And you've seen a million movies about that, whether it's Yellowbeard or The Lost Treasure of Sierra Madre. There's a ton of movies on that. So that's the other extreme. Now, in the modern age, you have the technology of the one-way GPS receiver, which gives you the ability to pinpoint an exact GPS location, and you can bury your metals at a place where no one else knows where they are. That would be the ultimate extreme. I think that's something that the AOL spammer did, and as far as I know to this day, they never have found the metals of the AOL spammer. I believe they actually dug up his grandmother's yard searching for the metals and made a whole bunch of holes, and she came out and told him, "Why are you looking here?" He went out into the hills for 3 hours. So that's the extreme. It's up to you how you want to do that. There's a lot of people who have gigantic gun safes that are bolted down to concrete, and it would take an army of people to move them. So it's all up to you. As far as hiding things from detectors, I don't really know, but the rumors I've heard is 4 feet, and if you put a big old slab of concrete on top of it, there's no detector in the world that can find it. But again, that's just rumor. So it's up to you how you want to go about storing your metals, and it just depends on how big of a tinfoil hatter you are as to which option you choose. Now, over to the topic of the night, and I'm going to sound like a broken record on this, and the reason why I do this is because I just think that there's so much bias and so much resistance to this idea that I really want to hammer it home so people understand that I'm serious about this. I really believe this is the case, and I think that people like Simon Black and Jimmy Rogers are legitimate sources. But before I go over to the story, I want to look at the news that came out today. This is a very interesting story that came out on Fox Business, and this is titled, "Their GDP Was What? China's Credibility Problem." So I'm going to read a little bit of this. China announced on Friday its gross domestic product slowed to a pace just north of 8% in the first quarter, but like most economic readings that come out of the Asian giant, investors are taking it with a grain of salt. Now, I think that's kind of funny because I believe the opposite is true. I think that China is actually much more honest with their economic numbers than the United States is. So we'll continue. While no smoking gun has emerged, there's a general sense in the financial community that China, like some other frontier economies have in the past, may artificially inflate the numbers of its official statistics. Quote, "I think there's a sense that the data we get out of China is somewhat suspect in that it is to some degree subservient to political objectives," said Peter Kenny, managing director at Knight Capital. "The cynicism, which is only fueled by China's closed society, poses serious obstacles for investors attempting to ascertain what's truly going on under the hood of this crucial economic engine. Asked about China's 8.1% GDP growth, Gordon Chang, author of The Coming Collapse of China, told Fox Business, "I don't know how they got to 8.1%. They just made the number up out of thin air." Now, I'm not going to go on reading here because these people are clowns, but the people that are making numbers up out of thin air are the U.S. government and the BLS, the Bureau of Lying Statisticians. These are the people who are making numbers up out of thin air, and you can see the results from what's going on in the different countries. So it's pretty obvious to me. It's not obvious to a lot of my listeners, but I'm trying to prove that's the case. So let's go over to Simon Black's article. This is called "Money is No Object. I Just Can't Find the Right Person." And Simon says, Jim Rogers has famously commented that if you were smart in the 18th century, you moved to France. If you were smart in the 19th century, you moved to England. If you were smart in the 20th century, you moved to the U.S. And if you're smart in the 21st century, you move to Asia. It's an absolutely true statement. Each time I'm in Asia, I'm overwhelmed at not only the massive opportunity that abounds for productive, creative, intelligent people, but also what a huge difference there is in cultural sentiment. From Singapore, where I just departed last night, to Vietnam, to Mongolia, to the Philippines, Asia is full of optimism and confidence, not doom and gloom. The reason is simple. Asian economies are based on production and savings. Western economies are based on consumption and debt. The market is simply reshuffling wealth, capital, and opportunity appropriately. What's nice is that, like our ancestors before us who moved abroad in search of a better life, anyone can choose to take advantage of this trend. For someone seeking employment, for example, Asia is full of prospects for both workers and professionals. English teachers are in incredibly high demand across the continent. Experienced professionals are routinely awarded with handsome executive compensation, raking in huge salaries from Abu Dhabi to Beijing. I had dinner last night with a friend in Singapore who was telling me that he would gladly pay a $1 million salary to the right person to manage his successful business. As he told me, quote, "Money is no object. I just can't find the right person." Aside from employment prospects, unique investment opportunities abound. I had a meeting with some private bankers in Singapore yesterday who were telling me about a number of really fantastic options they had available for clients. For example, if a client wants to own precious metals, the bank can purchase and securely store physical gold bars, but then provide a line of credit back to the client at an absurdly low rate of interest. In other words, you could purchase $1 million worth of gold, but then have access to an $800,000 credit line backed by the gold at just 1%. In Vietnam, you can even generate a yield storing your gold at the bank. Low interest rates are great for borrowers, and in this case, in places like Hong Kong and Singapore, even on investment, consumer, and commercial loans. One friend in Hong Kong is about to buy an office building and pay a whopping 1.5% interest. Another in Singapore borrows money at 1% interest for his trading account. He then invests the borrowed funds in high-quality, short-term corporate bonds. Now, I'm assuming these are Asian corporate bonds that pay 9% interest, making a tidy 8% on money that isn't even his. Opportunities for entrepreneurs are also substantial. Business thrives where there is access to capital and a growing affluent customer base. This is Asia. The number of people being lifted out of poverty and into the middle class in India, China, and Southeast Asia is staggering. So is the number of new millionaires being minted. I have friends who are building generational empires in Mongolia, easily the fastest growing economy in the world. Meanwhile, some of the world's top entrepreneurs are now making their homes in Singapore, including Facebook co-founder Eduardo Saverin. No doubt there is a lot of cultural inertia and resistance to this idea. Empires always resist the notion that they're no longer number one. But facts are facts, and the truth is quite simple. The most extraordinary opportunities in the world are across the Pacific. If you're hungry, the choice is obvious. So, excellent article by Simon Black. He takes an incredible amount of abuse, and you've got people like Fox News here, and I've watched these people sing this song for the last 10 years running, talking about a crash that's going to happen in Asia as China continues to build cities the size of Manhattan month after month after month, and being populated and being filled with millionaires and billionaires. So the West is falling behind. It's falling behind rapidly. It has adopted a socialist model, a model of bankruptcy. I covered yesterday the looming bankruptcy of California, and earlier I covered the welfare state. The West simply will not recognize that government policies here are collapsing the economy. They're destroying private capital. The Fed is doing everything wrong it can possibly do, and China is doing everything right. So I fully believe that this 8% figure is accurate. I have no reason to doubt it, and if we look at the type of anecdotal evidence that Simon Black gives, you know that it's true. So back to silver. The thing about silver that makes it such a great investment is that the Western banking powers are suppressing its price because it has the greatest potential to expose them as the frauds that they really are. And what's so great about it is that eventually these emerging economies with their millionaires and billionaires in China and Singapore and Vietnam and North Korea and Taiwan and soon Myanmar and all these other countries, they are going to have a tremendous demand for this silver because they're going to continue to boom, and they're going to pay a very high price, probably in a new currency or the newest currency, and it's going to be very valuable when they do. And we'll talk to you next time.